Welcome to The Explainer. Today, we're going to unpack the story of, well, one of the most successful investors in history, Warren Buffett. We're going to dig into the blueprint he used to build an absolute empire. Just to give you a sense of the scale we're talking about here, look at this number. That is roughly the price of a single Class A share of his company, Berkshire Hathaway, at its peak. For one share. It's just staggering.
So the big question is, how did one man build all this? How is that even possible? Well, the answer isn't just about picking some hot stocks. Nope, it's about a philosophy, a really clear and consistent one that he forged over a lifetime. And it all started way, way back when he was just a kid.
All right, so let's jump right in at the beginning, because long before anybody called him the Oracle of Omaha, he was just a boy in Nebraska who had this just an unbelievable knack for business. I mean, it is just amazing how early this all started. At age 7, he's already reading books about how to make $1,000. By 11, he's buying his first stock. At 13, get this, he's filing his first tax return and deducting his bicycle as a business expense. And that pinball machine business at age 16, it's the perfect example. He and a buddy bought one used machine, put it in a barber shop, and built it into a business they sold for $1,200. This was clearly never just a hobby for him. It was a calling, for sure. And, it seems like everyone around him could see it too. His own high school yearbook basically spelled out his entire future. Of course, little did they know he was going to become a lot more than just a stockbroker. Okay, but all that early hustle, that was really just the raw material. The real turning point came at Columbia Business School. That's where he found the mentor and the core ideas that would define his entire career. See, the entire Buffett empire is really built on this one powerful concept he learned from his professor, the legendary Benjamin Graham. It's called value investing. And in a nutshell, it's actually surprisingly simple. It's about buying great things when they're on sale. That's it. It's all about finding these wonderful companies that, for whatever reason, the market is temporarily undervaluing. Now, this requires a complete mental shift. Value investing isn't about trading, right? It's not about focusing on those little short-term price swings. It's about investing. You have to learn to see stocks not as these blinking numbers on a screen, but as ownership in an actual real-life business. You're not just renting the stock, you're buying the whole company. And his favorite holding period is, famously, forever. So Buffett pretty much boils all of Graham's wisdom down to these 3 core ideas. Number 1, see stocks as businesses. Think like a business owner. Number 2, use the market's mood swings to your advantage. Don't panic when it goes crazy. See those moments as big opportunities. And number 3, and this is probably the most important one, always, always seek a margin of safety. That just means you buy a stock for way less than what you think its real underlying value is. And that focus on the third pillar, that margin of safety, well, that's what led to his 2 most famous rules. The absolute top priority isn't just about making money. It's about not losing it in the first place. That safety margin, that buffer, is his ultimate protection against making a huge, catastrophic mistake. This, let's call it a colorful quote, it really illustrates another one of his key beliefs, focus. He actually came up with the term diversification to describe what he sees as a huge mistake, spreading your money across way too many different investments. He argues it's way, way better to deeply understand just a few truly great companies and invest heavily in those, instead of having just a shallow, surface-level knowledge of dozens of them. So, okay, how did he actually put all this into practice? Well, armed with his philosophy, in 1965, Buffett took control of a failing textile company. But here's the brilliant part. Instead of trying to save the textile business itself, he used its cash flow to start buying other, much better businesses. And that's how he began to transform it into the investment juggernaut we know today. And today, Berkshire Hathaway is, well, it's less of a single company and more like a cross-section of the entire American economy. It owns this huge, diverse collection of businesses that you would absolutely recognize instantly. We're talking about everything from the insurance you buy to the batteries in your remote and, yeah, even the ice cream you eat. And really, the results of that long-term strategy, they just speak for themselves. Since 1965, Berkshire has delivered a compounded annual gain of almost 20% for its shareholders. Let me be really clear about this. That kind of consistent growth over that long of a period, it's just almost unheard of. It's incredible.
But the story doesn't end with building one of the world's largest fortunes. For Warren Buffett, that was really only part one of the plan. Part two? Well, that's about giving almost all of it away. So far, Warren Buffett has given more than $60 billion to philanthropic causes. Most of it goes through the Bill and Melinda Gates Foundation and a few foundations run by his own kids. Back in 2010, he and Bill Gates got together and co-founded the Giving Pledge. This is basically a public promise by some of the world's wealthiest people to give the majority of their wealth away to charity. Buffett, though, he took it even a step further, pledging to donate over 99% of his entire fortune. And this quote about his own kids perfectly sums up his whole philosophy on inheritance. He truly believes that giving your kids a massive, unearned fortune can actually be more of a curse than a gift. He wants them to have enough to do anything, but not so much that they feel like doing nothing. He wants them to find their own purpose. So in the end, Buffett's life and his legacy really challenge all of us to think a little differently. His story isn't just about how to build this immense wealth through discipline and patience. It forces us to ask a much, much deeper question. What's the true value of wealth? What's the point of it all once you have it?
अगर आपको वीडियो पसंद आया हो तो लाइक, शेयर और सब्सक्राइब जरूर करें।